Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, we are going to be looking at market futures. Okay, that's going to happen at around, well, we have market futures, but looking at the actual, individual stock 24-hour markets opening up at 8 o'clock. But before we do that, I wanted to talk to you guys about Meta stock, go through some of the actual numbers. There's been a lot of people talking about the valuation of Meta, but I want to go through it myself, talk about what I actually like about the business, talk about a little bit of the portfolio rebalancing that I'm doing, and why I'm doing it, essentially. But let's get into it, okay? Because I'm stalling. All right. So first up, we are going to be looking at Meta through Fiscal AI. It's just the best way to look at stocks fundamentally, and I'm a fundamental investor. Okay, so the first thing that we need to look at is the price on Meta. So if we go, over the last 3 months or so, or even 6 months, whatever, we can switch this price. So most people have been following Meta's price. We went from last quarter, one of the highest prices that we've seen on Meta, $750 per share, showed off amazing earnings, and ended up falling down to nearly $589 per share. The reason of this was because Meta put up their own performance and people weren't happy with some of the numbers that they ended up putting up. Like, EPS ended up shrinking a ton. It was down like 80% from expectations because of a one-time tax hit that was a over $15 billion charge. So we're going to be looking at EPS through adjusted lenses today, because that one-time tax charge is not going to be of any recurring nature, and you can't really ask Meta to not pay their taxes, right? So that's not really going to be a strategy of theirs. However, we can switch this to drawdowns, right? Where we can see how much in a percent base that Meta's actually pulled back. If we look at it, historically, since the company has been public, we can actually see that one time in October of 2022, whenever they drew down all the way to essentially $88 per share, that was a 76% drawdown. Sorry, that chat's a little bit in the way. So if you're talking about opportune times to buy into Meta stock, this cavern right here looks unbelievable whenever you look at it just through drawdown. So I love this little added piece on Fiscal AI. But this most recent one, a 25% drop. Well, AI businesses are doing extremely well. Meta put up some of their highest numbers, accelerating growth rates, high margin, practices in their business. I just don't think that was an acceptable thing to see, while the rest of the Mag 7 had been, doing quite well. So Google's at all-time highs and Meta's taking a 25% haircut. I don't feel comfortable with that. So obviously, 590, or if you could have gotten $1 less than that, that was the opportune time to buy. But still, we are no longer back at the sort of 750s, 780s, potentially even 800s. If you were looking out going forward, we're still much cheaper than there. So I still think that there's opportunity to buy in, and I will be continuing to buy in, throughout the next couple of weeks. Now, whenever I talked about portfolio rebalancing for me, what I'm honestly referring to is some sectors that I end up holding. One of them being, and this might be new to some of you guys, but I'm a shareholder of Airbnb. Right? Sort of a new age tech play on travel and hospitality. I thought that they were going to do very well. I am over the moon with Brian Chesky. I love him as an operator. He's one of the strongest founders whenever it comes to culture in a business. And to some degree, he practically founded culture in businesses, or at least popularized it. So I've been a big proponent of that stock. However, whenever I look at my portfolio in terms of the sectors that I want to be a part of, it's really landing into 2 to 3 areas, right? 2 major ones, and then sort of a subsector of that. And that is artificial intelligence and blockchain technology. Those are really the 2 ones. But if we look at blockchain technology, what I could honestly say in a different way is artificial intelligence and financial technology. Maybe that's a better way to to sort of put it in those two sectors. I love e-commerce. I love fintech. Extremely easy to understand businesses. And the last very easy to understand business that falls under that e-commerce subsector is advertising. Okay. E-commerce doesn't do well without advertising. Advertising doesn't do well without e-commerce growth. And AI, as we've seen from Mark Zuckerberg, and we'll talk about some of the quotes that they've ended up talking about here, is that AI is going to essentially have a seismic change to what we think of as advertising. I don't think people actually give this enough credit. So some people think, okay, well, they're working on advertising, and so these AI models are going to help target people better because Meta has the data and they know who their customers are. And to some extent, that is true. Ultra personalized advertisements. Maybe some people think that's dystopian, but I don't think it means what people think it means. So I think that people think it means, oh, hi, Mark, you're from California. You have 2 kids, 1 son and 1 daughter. Would you like to buy this king size mattress for, you and your wife that is Tempur-Pedic because you're probably on your feet all day or something like that? That's not what, ultra personalized ads really means. I mean, to some extent that might be a good ad, but what I think it actually means is that there's going to be an understanding. AI will be able to understand, okay, Mark has scrolled past, and in fact, he's actually closed the app whenever he's passed an advertisement that seemed a little too salesy, that was actually too personalized for him. We said he was in his city. He didn't like that. He actually clicked away. Let's never do that again. In fact, we actually noticed from Mark that he, was really keen on buying things that had big promotions, and he really is responding to scarcity and deals. So going forward, we're not just going to target him with advertisements that come up on our platform that promote scarcity and promote deals and these sort of things, but we're actually going to make each individual advertisement that we send out to Mark, the text will be personalized just to him, not to a cohort of people, just to him. The video and the images, or sorry, I should reverse that. The images and the videos, emphasis on videos, will be ultra personalized to just one individual. Because the cost to create content going forward, being in a low cost to create tokens, high quality advertisements, we could create videos that fit onto Mark's Instagram Reels and make things that fit into his preferences of scarcity or luxury goods or all the things that we know about him based on he's a really impulse shopper. So we know that the day that he has a problem, he looks for that solution and is willing to press the buy button. Okay, so we need to make sure that we create a promotion for this product that we know is of high quality to solve the problem that he was just searching for, through one of our family of apps. So that is, very, very interesting. I love this idea of Meta literally improving the amount of money that they make based on how much improvement artificial intelligence sees. So this is not a bet on chips. This is not a bet on, well, it is a bet on social media, but really it's a bet on how much the models actually improve. The more compute that Meta ends up seeing will end up improving the models even more. We know that. And then the models themselves also get smarter, right? That's all going to go to many companies' bottom lines, but especially Mark Zuckerberg's. Now, the very interesting thing, and where I've rotated my portfolio recently based on my beliefs, is that generative AI is going to be so good, so ultra personalized, and the third-party advertising companies are not as exciting to me as the ones that own the customer. Okay, so I'm betting on Reddit, I'm betting on Meta, I'm betting on a lot of the banks and e-commerce stores like Amazon and Shopify who enable these types of services. But I'm less and less betting on the AppLovins and the TTDs and some of these buy-side platforms and stuff. I actually think AI is going to be able to solve a lot of those traffic issues. So I think that that's quite interesting. We'll talk about some of that in a second. Let's quickly look at some of Meta's numbers just to get a theme for what's actually going on here, okay? Because I know that people talk about it being cheap, but I don't think that people are actually enjoying what we're taking a look at. This is a company making $51 billion a quarter, okay? And this is that's Q3, that's not Q4. So Q4, during holiday spend, they always see a massive spike up in earnings. Okay, we are going to see that once again. So a big leg up on earnings. If we go ahead and take a look at estimates, which is built directly into Fiscal AI, we could switch this to quarterly. For next quarter, the consensus is $58.3 billion. $58.3 billion. EPS is expected at $8.15. Okay, last quarter was $7.25 on a adjusted basis. So it actually came in much lower than that, but we can see here. So I'll show you this. If we look at Meta's EPS and switch that back to quarterly, we see this massive drawdown. But remember, this is because they're paying their taxes. They had a massive one-time charge. It's not really what we're seeing. And by the way, let me make this much closer. We don't need that much data. But it does just go to show you, by the way, but before I actually switch this, it does go to show you this is the type of company that you're buying. This is a very fast scaler, but that drop-off does look scary, right? So let me help you with that as well. One of the things that we can also do, this is brand new to Fiscal AI, we can go to adjusted, where they're actually pulling the real adjusted numbers. And then you can see how they're adjusting them, whether it's a standardized adjustment, a mixed adjustment, which means it's maybe company specific, and then the actual numbers that we're end up seeing. But if we look at adjusted EPS, and they're looking a little forward here, so we just drag that back a little bit. For the most part, there's not many adjustments. I got to move my mouse. It's making that horrible to read. For the most part on Meta, there's not many adjustments, but there has been twice in these last, 20 quarters or so. And the most recent one is very important. We actually did grow on EPS. Margins improved, growth improved. We went from $7.14 to $7.25 if you did not include that tax charge. Next quarter, there is no tax charge. We're essentially going to see, what did they say? $8.15, which would be the highest quarter that we've ever seen, surpassing last year's December's numbers. Okay. Alongside that, so you're getting a very fast-growing business. And I don't think people give this enough credit. Like, there's been quarters where SoFi has grown less than 26%, being a company that's bringing in less than $1 billion in revenue a quarter. They're bringing in $50 billion and growing faster than some quarters of much, much smaller businesses. Like, it's insanity. Now, you also, whenever buying Meta, one of the strengths that you get is that this is also one of the most popular companies in the world, not just by consumer basis, but also as an investment. So the due diligence, the analysts, the amount of coverage, the amount of people that are actually feeling and using the product is in the billions, 3.5 billion, essentially, users across their family of apps. So there's not a whole lot of things that we don't know about this business that could end up saying, oh, what's the risk of next quarter them dropping down to 10%? That's really great. It also helps with some of the investing and the covered calls and sort of the liquidity on this stock is also insane, just because they're over $1 trillion. That's very important in why I'm liking Meta as well. Let me just make that a little bit bigger. Okay. Let's switch over really quickly to segments and KPIs. This is what differentiates Fiscal AI. And we can take a look at family. Actually, before I do this, I should actually show you guys individual segments of revenue. So there's really 3 segments of their business in terms of revenue. One is advertising revenue. Okay. And that's the high majority of their earnings. So their growth is not going to look too dissimilar from their total revenue. 25.5% versus 26%. Where do we get that additional revenue? Well, we find it in other segments, which is some of the subscription stuff. So you're seeing like Instagram verified accounts, stuff like this. Okay, so some additional revenue sources there, and then Reality Labs. Reality Labs is like their dump set of all of their revenue. So this is where they're putting, you know, Oculus or Meta Quest, or now Meta Quest, where they're putting their Ray-Ban glasses, some of these things, Metaverse Horizons, all of those sorts of, you know, sources of revenue for future projects going out even further. Now, those two segments of business, if we take a look, are actually growing quite differently from their revenue or their, you know, huge amount of revenue. So don't take this into account too much. This is, you can see the bars here. They're barely making a dent. It's mostly blue. So the 25% is really what we need to pay attention to. And even that looks amazing. But the subscription revenue is growing at nearly 60%. And then Reality Labs, as of last quarter, they did say a lot of this was quite the bump up because it's Q3, that a lot of retailers have started to pre-purchase the Meta Quests to sort of put them on their shelves getting ready for holiday time, because it's a great gift to give you know, certain teens or kids or whatever for the holidays. So this is a big bump up to, you know, roughly 75%, but don't expect that level going forward. They continue to need to find you know, new types of revenue streams and improve their AI glasses, which, by the way, the Meta Ray-Bans and Oakley glasses are doing extremely well. But the ones that have the display, the sort of AR glasses that they're making, completely sold out within 48 hours of them announcing that through their, you know, horrible product release, which had a problem for every single demonstration that they had. Something went wrong. So just realize that there are a ton of customers that want access to these products. If and I believe definitely, like certainly that they will become a real thing. I will definitely be getting a Meta always on display for myself, if it's going to help me be able to look at messages or know where I'm walking or be able to order myself an Uber on the go. I'm a natural glasses wearer, so it just makes a lot of sense for me. How will that fare for people that don't wear glasses all the time? I'm not sure, but for me, it makes a lot of sense. Yeah, so even with a botched showcase, to know that they've gotten that many sales, I'm really interested to see what happens whenever we, you know, actually see something very real here. Okay. Next, I wanted to show off, because now that we've seen their actual advertising revenue and everything, I wanted to take a look at first their like average revenue per person on their family of apps. So their family of apps is really, you know, Facebook, Instagram, WhatsApp, all of these different sorts of you know, products. But let's also include the growth rate here, because I think for a lot of people, they definitely believed that a company this size that has 3.5, you know, billion users, that this would not be able to continue to grow. But look at this, not just the actual sheer number, but the growth rate is just incredible. We're talking about, you know, nearly 17, 18% on growth of average revenue per person. Okay. This has continued to hold up in very, very high numbers for multiple years now. This is Meta, baby. Like, and remember, I have not been always this positive on Meta, but I think that it's coupled with such a discount in the actual stock. So one of the things that we can also do, we can switch over. Let's go to Mag 7 names really quick. I'm also going to, well, we don't really have to look at Oracle. That's not technically a Mag 7. Well, it's not even technically, it just isn't. And then instead of looking at total revenue, let's go through price to earnings first. I have to adjust this a little bit to get rid of some of those quarters that were, actually, we can just look at the last year or so, if that. So quickly, you're going to notice whenever looking at all these businesses, this is the Mag 7 on a PE ratio. One company is not like the other. Pink here is Tesla. So at nearly a 300 PE, let's just remove this. I'm not even saying that it's expensive, right? There's a lot of future expectations for Tesla. So I'm going to keep PE up, actually, and I'm going to remove Tesla from this list. I'm also going to zoom in. I might even just go to the last sort of 2 quarters or so. What we've also been able to see, remember, this is on a trailing basis, is that a lot of sale on NVIDIA here. So now at 43.9 times, which I actually think is a decent price to pay for a company that's growing at 60+% rates and margins improving, and they continue to hold the number one chips that are available, that every single company underneath them are their biggest customers. But Apple, sorry, my camera's in the way, 37 times, Microsoft 35 times, Amazon 32 times, Google 31 times, and then all the way at the bottom, 28.6 times on a PE ratio. What is even the Schiller PE? Schiller PE ratio, S&P 500. Let's just see where the rest of the market is at. The market's at 40 times. Well, on a Schiller PE. I don't even need to do Schiller PE. Sorry, about 31 times. The S&P 500 is a 30 times PE ratio. Okay? 30 times. That means Meta is cheaper than the average market in, like, if you talk about a moat, and now if Mark Zuckerberg goes up in front of Congress, he's not going to say he has a moat. The companies with the strongest moats act like they have none. And the companies that have none act like they have this defensible freaking tower that's up. Look at the differences. And I own both businesses, so I can talk this way. Look at the way PayPal talks about their moat while they lose it. And then look at the way Meta talks about their moat. They go, hey, you know what? I mean, there's no investigation needed here. There's a ton of players in our space. While they grow at 26%, bringing in tens and tens of billions of dollars. It's insane. So very key way to almost point out a moat is who's actually saying they have one. The opposite is quite the truth. Let's look at forward PE. At the top here, you have Apple. This is, to have a high PE, a high price to earnings is not good. It means that you're paying a lot for a company. The forward PE is what you look to, next, like what we want to see next. 33.8 times. And sorry, where was there one before? This is not an Apple talk, but yeah, we're going from 37 to 33. There's not a lot of growth expected for Apple, but this isn't an Apple conversation. I could bring up what their estimates are and everything. I don't want to do that. Let's focus on Meta. And if you're just taking a look, if I just remove my mouse here, it's pretty quick or easy to see where Meta is. I mean, they are by far at the bottom. And the 2 companies that I have the most conviction on, I'm not adding the most to NVIDIA, but it is by far my biggest position, is NVIDIA here at 25.4. I didn't even realize it was that low. I feel like crying. 25 times. What are we talking about here, guys? What is the forward PE of the S&P 500? Forward PE of the S&P 500. Forward estimates 23.5 times. So NVIDIA is a little bit more expensive, and then Meta is once again below that. Okay. That is just crazy to me. That blows me away. You can buy these quality companies. I mean, like fortress balance sheets. Okay. Huge cash piles. And the only degradation of Meta's cash pile is not to defend their moat, but it's to try to take even more. They are choosing to essentially invest a lot in artificial intelligence because that's what they believe in, and that's where a lot of their cash is going. It is going towards building out a 1 gigawatt data center, Prometheus, which is expected next year, and then Hyperion, which is data center that's expected to grow into a 5 gigawatt data center. It's essentially the size of Manhattan. Okay. Those those investments are not even needed to secure where they are versus versus the rest of the market. We're going to take a look at futures and the stocks here in a little bit. I'll do that closer to 8 o'clock. I just, for my own sanity, I like to focus on not just the day-to-day stuff that's happening, but really, what's happening in the companies that we're trying to buy today, right? I think that that's much more important than looking at just the price targets or the sentiment of what people think in these companies. Like, just to put it into perspective, whenever talking about the want to look at futures, that's sentiment of the market. The same market that sold off Meta from 750 all the way down to, below 590 in the matter of a couple weeks is the one that people are crying desperately so bad to hear. What are they thinking? What's the broader market thinking? I don't care. I think that they've made, massive mistakes here. Okay. So I'm, obviously very bullish on Meta here. Like I said, I think advertising, the space is going to change dramatically. Like, huge step ups in the change for advertising, generative AI, agentic AI. By the way, I know Llama's not doing that well, but to count Meta out, like Mark Zuckerberg and some of the engineering teams that they have made have created like some of the most popular coding languages. I'm not talking about code bases or open source or something. I mean, like the languages that are writing the internet, like React, for example, is from Facebook. Like, these are some of the smartest engineers in the world. Double check. I'm pretty sure React and GraphLQ and all of those languages were actually created. Who created React? Let me see. Yeah, software engineer at Facebook. And then who created GraphQL? Developed by Meta Platforms as well. Okay. Cool. Yeah. But literally, those are the types of things that you're getting from Meta, is like a lot of the framework of some of the different programs, applications, and like websites that we end up seeing. A lot of it has actually come from Meta. These are some very smart people here, and people, now that they're getting artificial intelligence, which is allowing, and Susan even said this from Meta. They said, well, we're getting to a place where artificial intelligence is going to double the output of the engineers that are in our that are employed by Meta. So are we trying to cut a bunch of headcount? Do I have total employee count on here? Headcount, not employee. What else would it be called? I know it says it in their investor relations. Yeah, there we go. So they are 78,000 employees, and they're up 8% year over year. Okay. One of the things that they also recently said was, hey, should we hire more or cut based on artificial intelligence? Well, if artificial intelligence is going to double the productivity of our engineers, it actually means that hiring is actually yielding us a much better result than it was previously. We're not looking to cut headcount. We're actually looking to hire more, because those people are going to be more productive, right? So I actually think that was such a great positive way to look at it until they start doing otherwise. I have to believe them. If they continue to hire more, like I have to take their word for it. But, to go work at Meta, there's not a lot of entry level jobs. So there's still a problem there. I'm not making a macro comment, but yeah, anyway. Meta is a dividend paying business. On an annual yield for their dividends is about 3 or 0.3%, sorry. And then buybacks also an additional 2.7%. Whenever we sold them off like crazy to like $88 a share, it was crazy how much the total share count actually got hit. Take a look at this. So this is their share count over time, and I can even put a percent change on this. So you can see they're still buying back their shares, 1% per year. The negatives are good. We don't want them adding shares, right? But if we go out a little bit, sorry, this is annual. If we go out a little bit further, like here, you can actually see during, the big sell-off of Meta, just how much on a percent base they were buying back their shares. They brought their outstanding share count from 2.85 million down to 2.5. So essentially reducing their total share count by like 300 million shares. Crazy. So they're happy to buy back the shares. They're happy to give out a dividend to attract new types of users. If people want to start valuing Meta like a value stock, they've got no problem with that, right? As long as the business continues to truck on, they don't care who buys the company up. Let me take this off again. Now let's take a look. We already talked about price to earnings, and let's look at free cash flow really quick. So some of this is offset whenever you get their operating cash flow minused out by the capital expenditures, which is the purchase of property and equipment, right? Which would include their chips, would include the Prometheus build out and the Hyperion build out and all of their massive expenses, which people do have real concern about. But this is why, how can I play both sides? You guys have to think about it from my, and I could be wrong. I'm not saying but to understand why I like this spend, you have to understand that the way that I think. My biggest position is NVIDIA. I think that those chips, not just NVIDIA's, but artificial intelligence in general, is going to be a productivity just boom. Okay. The companies that are spending the most, I don't think are the worst businesses. I think that they're the most forward-looking, the ones that see the value that I see. And I mean, it's good confirmation bias for me to be on the same team as Mark Zuckerberg and Jeff Bezos and Elon Musk and all of them. I'm not that smart, but I'm just, I know who the smart people are, right? That's all I'm trying to focus on. So this continued investment in artificial intelligence fits what I want from both a company in advertising, which I think is a AI proof, and in fact, an industry that is actually strengthened by artificial intelligence. And they still have the opportunity for Llama to be, a frontier model, and for them to create some massive models there that end up helping their business overall, which they're already seeing, right? Their impressions, their conversions, all of these things are being improved by artificial intelligence today. There's no line item in their P&L that essentially says, oh, this is how much money they're making from advertising, right? Or yes, there is, sorry, in artificial intelligence. It just shows up as advertising. So you kind of have to take both together. And I would assume that they would not be making $20 billion expenditures. Like Mark Zuckerberg has worked very hard for him to make this $18 billion. He's not just giving it to NVIDIA because him and Jensen are boys. He's doing that because he thinks that it's going to strengthen the position in, artificial intelligence and social media in general. And one of the things that is also a strong theme that I've seen across not only Meta's position here, but Amazon and Shopify and all of these, is that the more coding that they can get done on a per employee basis, the larger problems that they can try to solve. Meta is taking on things like Reels. It's on a $50 billion run rate now. If you guys didn't know that, Reels alone, like the small short videos, is making them on an annualized run rate of $50 billion. Okay. what happens whenever they truly, I know you can upload long form content to things like Facebook and stuff like this, but what if they really try to go after YouTube and you know, try to tackle bigger problems and go after a new social media space, try to increase the amount of time that people spend on their apps? And it doesn't have to be bad. It doesn't have to be bad for mental health and all of these things. I'm aware that there's um, sort of problems with Meta in that degree, and that some people look at this almost like a sin stock. In that regard, I wouldn't even bother underwriting it. If you have a problem with the product, it's probably best that you just don't invest at all. Okay. Similarly, that you wouldn't invest in a, you know, pornography production studio or a cigarette company or a private jail or something like this. Go ahead and, make your own moral judgments. But to me, they're one of the largest, you know, advertising plays, one of the largest social media plays. I like both of those. I think it's hard to sort of say, oh, no, I'm super for TikTok or YouTube or some of these things, but I'm anti WhatsApp and Facebook and Instagram. I think they'll be playing in similar spaces as they try to enter different markets. Like as we know, TikTok is going towards live streams. They're going towards many of these types of things. Let's take a look really quick at actually, it probably is just best to look at it this way. Let's drop this really quick. So now I'm looking at a forward valuation. If we look at next year's forward valuation, or sorry, next 12 months, but full year 2026, roughly the same, but around 22 to 21 and a half times as a multiple. The year after that, 19 and a half times. The year after that, 18.2 times. This is extremely cheap. And that's assuming that they're right to try to predict how much money that they're actually going to make. Facebook has beaten their estimates a lot. 90+% of the time, they beat their estimates on revenue and on earnings, right? So even these types of forward estimates are probably wrong to the downside. That goes across a lot of the market. And forward free cash flow as well. Let's take a look, actually, because that's sort of showing not the wrong thing, but it's showing it without context. So I showed off capital expenditures. I want to show off free cash flow now. So remember, their capital expenditures, and I can actually just overlay this. Their capital expenditures have increased dramatically, especially in the last couple of years as the real investment in AI has picked up. So we've gone from essentially negative $6.5 billion to $18 billion. It's essentially a triple almost in spending on CapEx. Free cash flow, however, has stayed pretty consistent and still bringing in over $11 billion of free cash flow while spending for the future. Okay. The companies that choose to not spend for the future and are holding back on capital expenditures risk losing market share. What's the chances that these companies that are spending this additional $18 billion is, one, not seeing a yield out of it, and two, not securing their future and their market share, and to potentially enter new markets as well? I don't know. I think there's so many directions that Meta can go. They're buying up this, what might even be close to like 10 gigawatts of power for data centers. Let's imagine that they don't need all of that, but the build outs have already started. They said they would slow roll the builds if they needed additional time. But what happens in that case if, there's other customers that need that compute and they don't need it currently? Meta's a massive name. Like who knows? They could enter sort of an external cloud service and offer these types of products, almost like a neo cloud, to other businesses. There's so many routes for them to continue to grow at very fast rates. But if they can continue to squeeze out more and more users, 3.5 billion, and average revenue per user continues to climb, and the rate at which average revenue per user is climbing is increasing, why do they need to try anything else? They found something that's working, So to that degree, I think is really important. Okay. We have 4 minutes until, 4 minutes until the not the futures markets, but the after hours markets open up, or 24-hour markets open up. I was not looking at the chat as I was pretty engaged, but what is everyone saying? Are people talking about Meta? ETH down, silver's at all-time highs, Bitcoin down. Okay. The long weekend is over. How did you guys like it? Friday was a half day in the markets. Not too bad. The conversation's been all about crypto crashing. It happens. It happens. Amidst, yeah, he said that he was not going to be around. But no, so by the way, I do sort of these every single week. I wasn't able to do it on Friday because it was a half day. But I like to break down a new company that I haven't looked at in a while. So this week was Meta. I've been looking at, in the past, the Trade Desk, AppLovin, Reddit, Axon, Chime, SoFi, all these different names. So once a week we use Fiscal AI. I'm not a guy that has a lot of sponsors. I've literally sponsored with Fiscal AI because I literally think, like, I'm paying for the service. I'm paying for their enterprise level plan. It's my favorite product on the market right now because they are, one, actually bringing real data to you in real time, and two, getting like the segments and KPIs data and all of that stuff. And the small glitches, by the way, like last time we tried lining up Facebook and let's look at that really quickly. I was looking at Facebook and Meta the other time. Where was it? Or maybe I can just do it in the Meg 7 one. I was looking at Facebook and Meta, and it wasn't lining up because, NVIDIA ends up showing off. Or did I say Facebook and Meta? I was lining up NVIDIA and Meta, and it wasn't lining up because NVIDIA's thing is actually a month later, so it's actually counting it as Q4. Anyway, I literally messaged them and they fixed it like the next day. Okay, sorry, that wasn't. So now they line up perfectly. Like, the team works so fast. Like, you look at what they've been working on, and like they've added all these amazing things, like completely revamped the product, and it's like 6 days apart from each other. Another like sort of week apart from each other. Like the speed at which they are upgrading this service is so fast. Okay, so if you guys see anything wrong, legitimately just hit this button, like the help center, and just send them an email. They said, like, there's this guy that works full time. All he does is make sure that like the tickets are addressed immediately. I saw one thing with Upstart, it was wrong. I sent him a message like 30 minutes later. He was like, check again, please. And it was fixed. And that means it was fixed for everyone, So they are fanatical about this product. Okay. Yeah. By the way, it's 8:00 now. We're going to switch over. If you guys are interested in Fiscal AI and want to see more, there's a ton of stuff. Like, there's earnings calendars, ETFs. You can actually see like what makes up the S&P 500. They have, some of the biggest, like you can see, how much Coca-Cola does Warren Buffett have over time, and the amount of shares and all of these things. Like check it out. They have all the super investors and all their funds and everything. It's all in here. Like, I never go through any of that stuff. Right now, I think until December 1st, they only do one promotion a year. It's on Black Friday, 30% off at Fiscal AI/future. If you guys are interested, let's take a look at the futures markets. Okay. Yes, we're getting the numbers, ladies and gentlemen. Robinhood's down 2.5%. SoFi is down. I was not expecting that, actually. I wasn't expecting that. The chance of a rate cut has actually increased. And yet we're seeing a little blood in the streets. The chance of a rate cut, I thought the financials would have been a little bit different. Silver's up 1.5%. Okay. Gold's up 0.3%. Wix is up 3.4%. Let's check some of the more popular names here. A lot of the really small names are the ones actually moving here. Let's check Nvidia. Nvidia down 1.3% to 174. This is just criminal. SoFi's down 2% to $29.11. Tesla down 1.4%. Let me remove that, by the way. We're talking markets now. Apple's down just slightly. Upstart's down 2%. Man, what didn't the chance of a rate cut go up to 87.5%? Yeah, it's 87.5% right now. I would have expected the financials. There must be something else. Maybe we need to check on the markets. I also heard Scott Bessent say that they have the person who they think will be the chairman of the Federal Reserve now. However, they want to say it potentially before Christmas time. So before the holidays, they're expecting to say it. Who do you guys think it is? It looks like we are could be Venezuela worries. That it definitely could be. Yeah. There might be some concern of Japan worry. Japanese 30-year. Yeah, that's climbing back up again. Could be that. It definitely could be that. Okay. Because as the actual bond yields had gone down, or the treasury yields had gone down, that I think sort of reset people's concerns, and people were a little bit, less fearful. But if it's starting to reaccelerate and maybe we end up hitting new highs here in the next couple days or something, that might end up sparking new fears again for Japanese markets. Rumble down 1.6%. Cypher mining down 8%. Uh-oh. Here we go. Okay, let's take a look at some of these neo clouds. Nebius down 2.8%. Okay, all right. What's one that I think is going to be down a lot? Iran's not going to be down that much. Down 5. Okay, that was more than I thought. CoreWeave, not down too much. Down 2.8. CleanSpark's going to be down a ton. Down 9. Okay, all right. I got to feel a little bit for the market there. Is Hood dropping more? It's continuing to fall here. 123.90 down 3.6%. Circle down 3.6% as well. Gosh, what is? I don't even think BMNR is updated on Moomoo. Let me check the actual price on BMNR stock. This is I'm getting rid of Moomoo here soon. I freaking hate using it. I'm sure Weeble has it. Yeah, dude, BMNR is down 7.7%. Okay. SoFi's down, I think, just above 3%, like 2 point something. Bitfarm's down 12. Jeez. The Nvidia dump is the most surprising. Like, it just can't catch a break. Everything I'm looking at is saying that Meta and Nvidia is just super, like, grossly cheap, and yet nothing is, dumping even further, 1.7%. Wow. Upstart down 3.6. That's falling to new lows in the session here. Pagaya 3.8. Open Door down 4. Shift 4 up 5.4%. I don't know, like, what is causing Shift 4 to sort of be an outlier here. Might just be how much they've sold off previously. I also saw that they landed a large deal with a Canadian stadium, which was their first stadium deal that they've gotten in the Canadian market. That's quite interesting. Bitcoin 87,000. Yikes. And oh god, man, I always hit that freaking Grayscale Trust every time I try to search for ETH. ETH down 4.7%, 2850. They don't actually have overnight markets, so we we're fine there, but that is quite the bleed. Okay. Yeah, Sentinel One up 1.2%. They've got earnings this week. Yeah, we need to talk about what's happening this week because we've got quite the earnings coming up. Uber down 1%. UiPath down 0.4%. What's BTBT? Down 7%. Gosh. And Bitfarms. Okay, down 7% now. Recovering. Datadog, Bank of America. Let's see what else is moving. Anyone in chat? What else is down? Oklo, that's a good one. Oklo down 3.3%. Tesla is my safety stock. That's hilarious. Let's see. Are we up on Tesla? Tesla only down 1%. I mean, hey, that sounds pretty good. Yeah. Okay. Tanner, get off the percents. What do you mean the percents? But you'd rather hear the sheer dollar amounts of the stocks rather than the percentage drop? I think the percentages are better than the sheer dollar amounts. VG is up. I mean, it can't keep bleeding off. It's not even up. It's down 2.5%. On by the way, zero volume. Like, I mean, legitimately zero. This is the amount of shares being purchased in real time. 137 shares, 50 shares, 500 shares, 592 shares. Like, these are real shares being purchased. This is not even a multiplier. If you see here, like if we click over to like Reddit, you can see that there's a K here. Oh, wait, no, the chat's in the way. Sorry. But you can see that this is in the thousands. If we go to like Meta or something big, we might end up seeing, no, this is in the thousands too, but at least, you're seeing 3.6 thousand, 2.6 thousand, stuff like this. Okay. Why are we down? Honestly, I don't know if I have an answer for you. I think it could just generally be, pressure on Japanese government bonds is surging. Open interest for Japanese 10-year government bonds is climbing up quite a lot right now. So maybe some Japan pressures there. That could be quite interesting. I also do believe if people think that there's concerns in Venezuela that are heating up, like no one likes those signs at all. Markets do not like any sort of conflict. So that is not exciting either. Oh, shift 4. I should have known. It was on zero volume. Has gone from up 4 to down 4. Upstart down 3.2%. SoFi down 2%, starting to climb back up. Let's see if that is across the board. Yep, Nvidia starting to climb back up. Apple's all over the place, kind of flat. That is really the safety name in this list. Coinbase down 3.8%. And then almost just everything being down roughly about 1%. Amazon down 1, TSM down 1.2, ARM down 1.1, Broadcom down 1.5%. SMCI up 1.7. Where's the Googs? Goog L we'll take a look at. Why isn't it on my thing? Down 1.1%. All right. Okay. Ethereum got harpooned. Yeah, there's a massive liquidation once again in crypto. So a lot of people that might have been, a little overextended are getting closed out. That's for sure. Rambler, no spamming. Chill, brother. Chill. Okay. Some of the travel names. I can take a look at some travel names. Isn't Jets wouldn't be trading with any volume. Down 1.5%, but legitimately zero volume. I don't even think I know the Delta tickers and everything. DAL, I know, what is it? AAL? Yeah, American Airlines. down 1.2%. Yeah, they're all roughly around that space. That's no bueno either, ladies and gentlemen. Crypto falling even further. Coinbase down 4.5%. Robinhood is down 3%. I mean, maybe prediction markets are keeping Robinhood afloat. I mean, it is zero volume, so take that with a grain of salt. The sky is getting closer to me. That's a funny way to say that. Yeah, the things I'm going to be looking to buy tomorrow on this dip, because you guys know I'm here to buy, is Meta and probably Nebius as well. Micron, yeah, we can take a look at Micron. Down 1.1%. AMD down 2. Meta down 1.4. Craziness. I would love to buy Nvidia here. I just have too much of it. I can't continue to add. I've like, even after this sell, I think I've actually fallen below 40%. I think I'm at like 39% of my total portfolio being in Nvidia, but it's still like, it's just so much. So in case I'm wrong and making the wrong decision on Nvidia versus some of the other silicon names, or maybe it just should be the infrastructure plays, or not the infrastructure plays, but the companies buying them, the big tech names that I should be buying, rather than some of these silicon names like Nvidia, AMD, or Broadcom. I don't know. I could be wrong, but based on the numbers that they're putting up, it does not feel like it. I just feel like a crazy person. Yeah. Tanner, talk about your SoFi call options. So what I was hoping for, because I saw a Fed rate cut decision and Scott Bessent saying that, they have someone now that they think is going to go in. If it's someone like Kevin Hassett, then he's extremely, going to be very dovish, pro crypto. Like, I just thought markets were going to rally on that. So, but SoFi is already in the $29 ranges. So I was prepared to write some covered calls next week. Like Monday morning, if we ended up seeing quite the pop on the stock. I might have to hold back here a little bit. Japan's 2-year yield jumps to highest level since the run-up to the global financial crisis, significantly wrecking. Yeah, that is, that's crazy. Japan's 2-year yield. Can I also get Japan's 2-year yield on here? Yeah. And let's go back a little bit. Oh my gosh, look at this. So wait, I only have till from August to now, but still not a great sign regardless. If the yield is increasing, that means demand is lowering, right? There's less people wanting to buy up those bonds. So not a great sign if you see the interest rates spiking up. It means that demand is really lowering. Yeah. The rug pull is starting tonight. What a fearmonger. It doesn't change a thing. Guys, I can't tell you how much of an iron stomach I have for this type of market. I mean, it doesn't feel any different than last week. I want to see some real information that's saying to me that Meta is going to have a worse off time. Black Friday, Cyber Monday so far is smashing records. People are buying. A lot of the companies that I'm following are saying the consumers are strong. And the ones that are not putting up good EPS growth, like Target is trying to say the consumer is not good. Like those types of businesses. I am not believing it. It's selective. I want to see real problems, and I'm not seeing that right now. I mean large ones, like weighted. But I'm not heading to the bunkers. I'm staying out and I'm buying your guys' fear. I'll buy when we hit new lows. Like the day we hit new lows, or like how much, maybe 5% lower than those lows, because selling to buy later on, of course, in theory, like in paper, that sounds great. Hey, why wouldn't I sell all my Nvidia today at 175 and then buy back in when it's at 165? I've just, was able to get $10 worth of more shares. But it's not as easy. And that's why I'm not playing. It's why a lot of investors that have been in for a long time don't often like to play that type of game, because you've probably had it where you've tried to sell and buy back in lower lows. You go, oh, okay, 1 week from now, it's going to be at lower lows. 2 weeks, like we're going through a true bear market now. Like I'm going to buy in when it's lower. And then you miss that bottom. And then it starts to recover. And then you say to yourself, okay, well, that's a dead cat bounce. It's going to reverse. And then the next week it ends up climbing up more. And you go, okay, well, it's just got to take some time. And then we climb up again. And then good news and more earnings reports come out. All of these things. And then you just realize that you've just completely missed. It's back above where you ended up selling it at. I don't play that type of game. DGSS says, I agree with the $10 donation. Thank you, brother. I appreciate that. Assuming I'm doing a statistical, brother. My audience is like 89% male, 11% female or something. So my odds are on my side, but let me know if I've got you all wrong. Black Friday already ended last week. What about Cyber Monday? Okay. I'll take Target over trailer trash Walmart one day, or any day. All right, well, you should look at the difference in the stocks. Because, there's a big difference in their performances. Rachel in chat saying, girl power. I don't know why I said it like that. There's so much emphasis on the girl, on the G. Okay, let's also take a look. Do we have new bank price? Yeah, down 1.4% on new. Melly down 1.4%. I mean, D-Local, I'm going to say down. I'm going to start this with down, flat. Not a single. Look at the volume there. That's very little volume. Flat on D-Local. I'm a little shocked, though, still. Those are my LATAM names that are in my portfolio. SoFi down 1.8. Little recovery here. Maybe. This is, I'm a technical analysis guy. So this is called the W for winning, which means we have to go back up to finish the letter. It's not correct until you finish the letter. So that means we're going back up to here. And don't trade on that, because if you guys lose your money, I'm not. You guys should have known. I'm a fundamental guy. I tricked you. Okay, Coinbase down 3.7%. Okay. Let's see. Bitcoin still dropping. Oh gosh. Bitcoin. I mean, we're above 8,700 or 87,000. Let's count our blessings. Yeah, the reason could be some sort of Venezuela conflict. I'm not sure yet. Charlie Sheen indicator winning. Okay. Are we still glitching, Tom Lee? Yeah, it might be a glitch. Okay. What the heck? Tanner already's got a bag. He doesn't care. He farms poor people for views. How am I farming? I'm just showing, I'm not even making a determination. And I honestly would say probably the average person that's watching this that has disposable income, while everyone's talking about how, poor the consumer is doing. Like, by the way, we just got that girl was on CNBC. I don't remember her name. I apologize. But she made up this claim called the Meg 9, which was all of the retail names, not big tech, but like the Best Buys and the Burlington Coat Factories and the Targets, like all these different types of retailers, and said how good they were doing. And then once again, markets take another crash down. But I would say that the people who are watching are probably more affluent than even the average consumer because you guys have additional money to invest. Most people who are paying their rent, like for real, if that's you guys are paycheck to paycheck. Here's my financial advice: save your money, stop buying stocks, and go put it in a savings account until your next, rent payment. Like, come on. And then instead of trying to learn how to do stocks better, learn how to make some additional income. You need to work on yourself at that point. And I'm not saying that there's something wrong with making minimum wage or something, but it's like your goal, if you are making minimum wage, is to not make just to make more, and that's not going to be through stocks. Compounding something at 10, 20, 30% whenever you have no money is not a good strategy. You need to figure out how to like, make a couple $100,000 and then worry about whether you can start making that at 10, 20, 30%. Yeah, you literally just can't invest if you're poor. They were affluent prior to BMNR. Oh man. That's funny. Yeah. I just heard him. Yeah. Yeah. My chat goes down by like 1,200 people. No, I'm okay. Do we know why we're red yet? I think that, some people said this might be Venezuela concerns. Wait, wait, I actually want to watch this. Donald Trump Jr. reveals why they embrace crypto. I'm not going to read the rest because it might give away some of what he said on this video, but I want to listen to this about why he got into crypto. Okay. It's also just good for the United States government, in my opinion. Not necessarily Bitcoin, but like stable coins in general just increase the amount that institutional money not institutional money, foreign money can go into U.S. treasuries. So it just strengthens the U.S. dollar to have an easier way to bring on more global money. Like,
the reason we got into crypto and we're all in on crypto and we're doing American Bitcoin and we have World Liberty Finance and USD1 was because there was a time, and probably I'd been on this show, where I could call any single banker in New York City. They'd pick up the phone. I'd be able to get a loan for whatever real estate project I was doing across the street. Then we got into politics, and all of a sudden, they wouldn't take your call. Right. You couldn't get financing. We were debanked. And what I realized, and my brother realized, because we were the recipients of every subpoena imaginable, was that, you know what, we were actually just the top of this sort of pyramid scheme that we didn't realize we were a part of, that the financial system was totally undemocratized. Because we had a certain balance sheet and whatever, we could kind of do whatever we wanted. The regular guy was messed up. Now we were all of a sudden in the shoes of the regular guy that wouldn't be able to take advantage of the markets. And we said, what's the solution for that? The answer is crypto. These decentralized platforms where you're not beholden to this, where you create efficiencies. As a guy that did real estate, why am I paying points in and out for title insurance that could be done on the blockchain? So we got into crypto not because it was like, hey, this is the next cool thing. We got into it out of necessity. We got into it because we understood just how quickly we could be turned off, even as an incredible developer from New York City. I mean, I don't think anyone would argue that we didn't change the skyline of New York City, but that disappeared in an instant. I mean, we're getting sued by the New York State AG, $500 million fees for paying back loans on time with it.
All right, I got the gist. I don't care that much. I thought it was going to be a little bit different than just the threat of debanking. Then why should I get into crypto? I'm not getting debanked. I don't know if that was the pitch that I would have went with. Hey, my super billionaire problems is that I'm into politics, so only politicians should get into crypto. Meh. Avoid politics, Tanner? I am avoiding politics. He was talking about crypto. I clicked on it for crypto. Did Tom Lee fix the glitch? Yeah, he's the one getting in and changing it, eh? Okay, let's go back and take a look at crypto. Bitcoin 87,200. Not bad. What are the big flying names right now? So Oklo is, I don't remember that one, down 2. I honestly think it's some of these smaller neo clouds. IREN down 3.5. That was a good recovery. It was down 5-6%. Cypher, what's Cypher's ticker again? 5.4%. That's a recovery from being down 9. What was what are some of the other ones? Why can't I think? Cypher mining. I'll do Clean Spark as well. Down 4.5%. Those might be the biggest negative names. Is there an industry that's down even more than that? Some people suggested airline stuff like this, but they're actually not down that much. What name was this? Intuit's up 2.3% on zero volume. I mean, the company that's probably down the most in terms of just sheer market cap is Nvidia, down 1.1%, but still decent recovery from some of the lows. So, Wolf, that's a good one. Thank you. TerraWolf, let's find that. Down 5.5. I think we might have found the winner. Oh, Quantum. Why did I not think about Quantum? Rigetti. What are we on Rigetti? 2.5. Ion Q. 2%, 1.6% roughly. Hut 8. Hut down 5.6 roughly. Space is getting hit too. Rocket Lab's been getting hit, so let's check that. Down 1.8. That's not terrible. Norwegian Cruise Lines. Yeah, some of these are not even moving that much. Sharpling Gaming down 4.7%. Yeah, BM&R and Sharpling Gaming might be up there on some of the biggest losers here. Nebius down 2.3%, $92. Okay. Yeah, some of the 2x. Excuse me. Some of the 2x leverage funds obviously are going to be having massive changes, but that's not really fair. Yeah, okay. Taiwan Semi down 1.4%, AMD down 1.6%, Meta down 1%. But recovering. We were back down to 367 here. That was crazy. Lemonade down 1.3%, zero volume. Open Door 2.6, Pagaya down 2.4, Rocket Companies down 1.6, Block 1%. Nubank down 1%. Nothing too crazy. Vertiv down 1.6%. That's actually not bad either. Silver up 1.7 and gold up 0.5. Silver's rocketing, man. Duolingo, that's a good one too. Let's see. Down 1.7. 188. SLV, though, up 1.6, 1.7-ish. I liked it when markets weren't open all the time. Why, though? Why have less access to information? Is this live or am I watching a replay? Well, I mean, it says live. Like, I feel like you just baited. You wanted me to pull your comment up. Clearly, it's live. Why would it not be? It's a replay of me watching the markets. This is the time. It literally says the time right here. November. It shows active times. Even under here, there's there's the date and time right here. Okay. He's got to be farming. Yeah, someone ban him. Let's see if you like it. Okay. Don't actually ban him. It was a joke. Is this AI generated or is this a real person? Okay. We all love the early shows. Yeah, I do a noon to about 3 o'clock show. Should be a lot of fun. I really like it. It keeps me on top of the markets, and usually I'm just reading through and doing everything. Now I'm just doing it live with you guys. You know, I have to talk a lot more, but I'm doing that at home anyway. Might as well go live. So I enjoy it. Okay. Yeah, overall, looks like we're going to be in a little bit of a dip tomorrow. Things can change pretty quickly. But and plus this is zero volume. Like we kind of have to really wait to see what you know, what the algorithms and bigger institutional money has to say, but currently futures are down roughly about like S&P 500 futures down 0.4%, NASDAQ 100 futures down 0.6%. It does not look like we're starting the week off great. I got to be honest with you guys, but for the most part, like I don't know. There's not crazy news to back this up, so it feels a little empty. You know, there's the Japan worries, which can be very real, but this is not the first time. We've seen this a lot. So if that is concerning to you, the companies that I'm investing in don't have, yeah, I don't know. It definitely could take away some money from U.S. markets, but overall, I'm not worried about it. I'm worried about what's happening here back at home. There might be a lot of rockiness and sell-off between then, but I'm just going to try to make sure to have a little bit of powder. That way I can buy the dip. You should be able to buy all of these stocks, no, on Robinhood, at least the ones that we have talked about. Yeah, Fighter's Destiny is true. Not even just weekly pumps and dumps on crypto, but just on these stocks in general. Like what's happening right now could completely change Monday morning. Powder meaning money. Little dry powder. Little gunpowder. But it's I do not have plenty of gunpowder, but I am selling off Airbnb to buy into Meta. That's going to happen. I do have some snow powder here too. I'm in Canada, so it's been snowing. It's not fun. Not no snow. Not founder mode, guys. I'm not talking founder mode. I live in Canada. It just snows sometimes. Japan carry trade is serious business. I bet it is. But I'm not going to bet on it. I'm not smart enough to. Yeah, the Great White North. Yeah. Snow powder or booger sugar? No. Snow. Literal frozen water. Like I said last time, do I look like somebody that you even like gets offered drugs? I mean, like, let's be real here. I wouldn't even know where to find it. Like, with this mustache, man, I'm coming off as a cop. Like, people are actively running away from me. I mean, at the drug deals. I'm not just saying like I'm some freak in the like walking down the streets, people are running away from me. But you get what I'm saying. Bloom Energy down 2.4%. The perfect front. What are your thoughts on S&P 500 inclusions on Friday? SoFi in Reddit. Is Reddit also available? I have both, so I'm fine with that. But if they are available for the S&P 500, I didn't even give that any thought. I don't know. They've only been public for so long. I don't know if they would, but I might have to buy a little bit more Reddit as well, because I've been wanting to get more into the advertising names. And yeah. Anyway, for SoFi's inclusion, some people said, because I just made a video and I said, hey, you know what? There is a possibility that we get in on Friday. And then people go, hey, you know what? Like, you're getting your hopes up. I'm like, no, I'm not even. I'm just saying, like, that is a future catalyst that we most likely than not are getting in the next 12 months. Okay. The earliest possibility that we can get in is on Friday. I don't think that there's going to be some large S&P 500 merger between two S&P companies that opens up a special slot between them. So we are eligible. We're a financial institution. There's a possibility we get in. Do we want that much inclusion? Or sorry, do we want that many financial names in the S&P 500? Not sure. They added Block. They added Coinbase. They added Robinhood. They added, there's been a couple names in the most recent changes. And now, as of the last, which was a special announcement, SanDisk getting in, maybe, which also could mean we might not rebalance and get any names. And maybe nothing gets in. Would you prefer SoFi inclusion now at 30 or March at 45? Well, I don't think that it's guaranteed that we'll be at 45 in March. I think like that's the hope for the performance. I think some people take performance-based stock units as some sort of like guarantee. It's like so not even close. And while you'd say, oh, management has a financial incentive to do that, so they'd want to. Yeah, the institutions have a financial incentive for them not to get that money. So there'd be a lot of smart money that actually holds SoFi below that to expire the performance-based stock units because they don't want to get diluted, right? So it's not guaranteed at all. So would I want inclusion? Yeah, I would want inclusion at $2. Like, it doesn't matter. What matters is that we have more buyers than sellers, and the S&P 500 is a great way to guarantee more buyers. Remember, it's not a one lump, like, oh, here's a new infusion of buyers at this rate, and they're going to buy at whatever price. No. If they buy in when we're at 30 billion, we'll have a higher weighting whenever we're 100 billion. We will get a higher weighting in the S&P 500. So they'll buy along the way. It's added buying pressure on the way up. So earlier the better, baby. Yeah. I'll take SoFi at 35 for a Christmas present. Me too. I don't want anything more than that. Well, you know what? I'll take Nvidia going up as well. Actually, more so. Like, what's happening to Nvidia is just a true shame. However, I know that they're going to fundamentally perform, or at least I have the utmost conviction. Don't trade alongside me. I'm an idiot. Okay. Like, I'm just a simpleton buying stocks here. But for me, every single person and their mother uses artificial intelligence, and that's increasing. It's going to increase the productivity of workforces. I like what we talked about at the beginning of the stream with Meta. I don't think that this is a matter of like, oh, we'll be able to target people better. I think it's a matter of changing the entire way every business even quote unquote does business. Okay. Like, talking from the change in models and the way that we, go after those customers, the way that we collect their data in the first place, the way that we generatively make ads for those individual people, like personalized directly to that one individual, to then the agentic work on the other side of replicating those tasks and doing data entry and all of these things that just like, I'm not talking about 10xing workforces. I'm talking about like 100xing workforces here. We're already seeing great gains today. And I mean, we're early days. Look at the UX UI of the internet back in the year 2000. People are worried about the .com bubble bursting. It's like, it's the same technology. It's the same zeros and ones. Silicon got a lot better during that time, but like some of these things are just going to take time as artificial intelligence just improves to see some of those additional gains. But it's a 20-year trade for me, AI. And so no, I'm not looking to sell off in any way. I'm not panic selling. Like this market reaction is not even, it doesn't even change my opinion. I'm just too damn bullish. Will SoFi 3x in 2026? I mean, I wouldn't count on it. It's very hard for a company to like SoFi got re-rated last year. Okay. We ended up seeing huge gains. For that to happen, not only happen again, but like happen twice as hard is an that would just be insane. To go from essentially $7 to $90 does not happen in 2-year periods very often. It has happened. But they would need to really show off some new growth. In SoFi's current state, that's not happening. If the loan platform business takes off and we get 100 or even 200 basis points worth of cuts, and they end up offering it to other institutions, and they are the preferred dealer for all of the government's student loan businesses as they offload that to private institutions, and they get into brokerage, well, not just get into brokerage, they have brokerage, but like gain space in that all in the next year, yeah, they'll triple. And no, no, I mean, with S&P 500 inclusion, S&P 500 inclusion should add, 20 to 30% to SoFi. Tanner's on drugs again? I am. Caffeine. That's a drug, right? Are you selling BMNR? No, not a share. SoFi will not be a preferred lender. Stop. Okay, well then don't believe that it's going to triple. I'm just saying that would all need to happen in order for it to triple. I'm not calling for that. Some people, I swear, like they're like on their phones, they're like looking at like their ex-girlfriend on Instagram. And they're like, she's with that freaking guy again. And then they hear like SoFi's going to be a preferred lender. And then they throw their phone against their wall and they go, it's not going to be a preferred. Listen to the words I'm saying, man. Go back in the transcript. I didn't say that. You guys are nuts. I'm saying this is the crazy things that would need to happen in order for it to triple. Go back to looking on your phone. Sicko. Oh, no. I got to punch the screen, bro. Okay. Let's go to SoFi. And we're down. Okay. Maybe actually setting up for a good 2026. Maybe you're right, actually. If we continue to drop, it's going to lead to a great 2026. Okay. Breaking. Tanner. I miss Tanner ranting. I rant during the day now, too. I just did. Nothing's changed. We're still here, baby. Let's see. Is Amazon up from Black Friday sales? So here's the thing, and what's interesting about these types of names. Amazon down 0.7%, Shopify down 0.25%. If Stripe was on here, they'd be down as well. I mean, like the thing is that by the way, these were all record breaking for all of these companies. Like nothing was wrong about this Black Friday, at least not so far. We're going to get the real details after Cyber Monday because that 4-day will be really good to compare against more 4-day time spans. That said, investors are forward looking. So it's not like, oh, once Christmas time comes, all the e-commerce plays end up going up. If you're smart enough to go, oh, you know what? I'm going to buy Amazon 1 week before Black Friday and I'm going to sell it 1 week after Black Friday because, hey, look at all these new sales. The investor before you would say, okay, I'm going to buy 2 weeks before Black Friday. Well, I'm going to then sell 2 weeks after Black Friday. Like everyone is looking forward out or thinking out on a forward basis. That's why we have things like last 12 months or LTM or trailing 12 months, TTM, is because you get all the cycles of a year added together. So that is how a lot of investors are going to compare Amazon to Amazon of last year. What was the Black Friday of last year? How much was that up? Is that a surprise to us? Is that growing faster than the general e-commerce space or faster than Amazon in general? Those are the things that are going to swing the stock, not just, hey, are we in a sales cycle or not? Because that's an annual recurring basis. We already know it's coming. What we didn't know, like if you go back to like COVID, for example, you could see the massive upswing in Amazon here because people realize like, oh, wait, shopping online is going to be freaking huge. And we didn't know that there was going to be, coronavirus and everyone was going to be locked indoors. So that was a surprise to the upside. That sent the stock skyrocketing. Shopify, same thing, stock skyrocketed because it was a surprise to the growth expected. But whenever you see someone project out earnings on Amazon for next year, they're already thinking Black Friday. They're already thinking holiday sales. Okay. Kind of interesting. Okay. Check out silver prices. We have been. I'm not looking at silver prices, but I'm just looking at a trust for silver, which essentially is just showing me, the same price change up 2.1%. Just a way to essentially buy liquid silver. Okay, let's see what other questions are in the chat. What happened to crypto, aka Glitch, has happened to Facebook and Instagram. Also, I got friends who keep their account private, but non-friends who can view their profile on Instagram and Facebook during Glitch and see all. I don't know what you're talking about. I have not been following the see all on Facebook Glitch. Okay. The ginger Clark Kent. I'm not even ginger, man. I have realized that my hair has definitely changed. Like, if you look at old pictures, I'm extremely blonde versus where I am today. But this is not ginger. I don't know how it's coming off on the camera, but like, what's going on? BE used to be my number one holding. BE is interesting. I need to do more due diligence. Someone reached out to me and said, hey, I'd love to help with some of your due diligence. Guys, honestly, you guys are trying to troll me. I am not a ginger. You're definitely ginger. Stop lying. You give ginger vibes too. My whole thing, my whole studio is freaking like orange. Okay. My desk in front of me. I'm coping so hard. This is unbelievable. I'm like, my desk is orange. It's not, it's just wood, but relax. Okay. What was I going to say? ChatGPT turned 3 today. Did you guys know that? They've gotten to 900 million. Like, I think it's weekly actives in 3 years. Isn't that nuts? Tinge of the ginge? Yeah, I might have a tinge of the ginge. It does look, it looks, I don't know. The stream is not doing well for me right now. Also, this haircut, I like, whatever. I have a soul, I swear. Yeah, that's funny. South Park just really ruined the ginger community, eh? They really just messed it all up for everyone. Okay. You also avoid sunlight like the plague. Yeah, but I take vitamins. That's like, that might as well be sunlight. No, I'm kidding. I don't need a bunch of comments. Get yourself some cool lighting. No, this is not even. I'm I am using the cool light. Like. Hold on. This is what warm lighting looks like. I am using cool lighting. This does not make me look any better. That's too funny. I got a white balance again. I got to do. Anyway, we'll see. Do they have sunlight in Canada? Not right now. Everything is down. Why is SoFi down? I think you just answered your question, because everything's down. People are just selling. People don't believe in markets. If that's why they're retracting a little bit before it all falls out. I am not. Well, I am losing my hair. I mean, it is happening, but it's not crazy. Yeah, so let's take a look. ETH, we'll do the big names, and then I'll probably do some Q&A. ETH 2850. That's looking all right. Solana, same exact thing. Bitcoin, same exact thing. TTD down 0.6. Let's look at the Meg 7 names. NVIDIA down 1.1. Definitely better. I'll take it. Apple down 0.3%. Yep, it's the value name of the Meg 7. Tesla down 0.8. 426. Literally, you cannot separate a Tesla shareholder from their shares. It's insane. Like, you could be like, oh, we're going to war. And they'd be like, yeah, but full self-driving is coming. Like, oh, no. The United States is defaulting on their debt. But is Elon? Like, they would just create whatever. They will never sell this stock. We're at 426. The other Meg 7 names are bleeding. And Tesla's like, no, I mean, Optimus is going to be here. Like, it's not even happening yet. Forward PEs, like, you're looking at multiple years. Institutions don't even believe in this name, and no one sells a share. It's so funny. There was a little panic, and then everyone's like, oh, wait, we got to buy. Like, you think NVIDIA has created some level of a cult? No, like, it's just crazy. They're going to be massive. No, I believe you. But there's a lot of names like this, and you don't see any of them with this level of belief. I mean, it is like we talk about cult stocks sometimes, and people put SoFi in that category. It's not even close. You sickos gave Elon $1 trillion payback. Like, I mean, the cult is strong. And I don't even say that in a bad way. That's such a good feeling to know that everyone is hodling like their life depends on it. What a great community to be involved in. I was involved with it for a long time, 2018 to essentially 2025, whenever I sold it all to buy more NVIDIA. But look at NVIDIA. Like, one is talking about how insane the numbers are going to be. The other one is putting up insane numbers. And then everyone's like, oh, it's Friday. It's time to sell NVIDIA. Like, there's no cult here. Where are the boys? Where's the strong-headed, Jensen to the moon? No one cares. And like, there's a fight in the other side of the world, or not a fight, sorry. But there's, debt crises in Japan, and everyone goes, sell the biggest semiconductor company, sell the company that's growing the fastest and making the most money in the world. Who needs it? Let's go into a safety play like Tesla. What's happening? It's honestly such a beautiful sign. Like, I don't know if I'll ever see another company that's that size. We're talking $1 trillion business. We're not talking about like a tough crowd of a $30 billion company that's come together like SoFi. Even then, like there's zero cult there. One little concern: short sellers are all over us. We can't stick together. There's no short squeezes. No one's willing to double down. It's a bank. You call Tesla a car company and like for they will nuke your account. But Tesla moves like a cryptocurrency. No, it does. It's solid as a rock. I'd rather be in Tesla right now, down 0.8, than in Bitcoin. It's falling off of a cliff. People are getting liquidated over at over in crypto land. They're running over to Tesla. Elon and shareholders are. It's insane. It honestly is beautiful. I'm not even triggered. I love it. I just think it is quite interesting. I don't think I've ever seen it before. Like there's no name like this. Apple, maybe a long time ago, you could say that there were these Apple fanatics. I think they've started to fall off as they've just like people have gotten worn down by the lack of innovation. I'm not saying anything. Okay. Yeah, the only other person that might have a cult is Tom Lee, and even that's tiny. It's tiny compared to Elon. It's a trading stock, not an investment. Tesla? Dude, there are like that's the complete opposite of what I actually believe. I mean, that might be the thing that is yielding you some money, but like I don't know of a stock as popular as Tesla where people like everyone here knows somebody that is full ported. 100% of their portfolio is in Tesla and nothing else, and it's been that way for 8 years. Like, it's truly special. It truly is. Dude has been like, oh, yeah. You want a Roadster? Sign up. And then everyone's like, all right, let's go ahead and sign up. And then they're like, but we're not gonna show you another piece of information on this car, and we're never gonna deliver it. And people are like, Elon, you know better than me, baby. And honestly, I'm picking fun. I actually do think he knows better than me, like 100%. And Tesla's going to be fine, and they will eventually put out a Roadster, and it's going to do great things. They said that the product announcement for the Tesla Roadster is not just going to be the best product announcement that they've done, not the best automotive announcement. They said it's going to be the best product announcement ever in history. And he can say these claims because the Tesla has one of the highest NPS scores of any other consumer product in the world. Do you know what actually? So Tesla's a very high NPS, net promoter score, or customer satisfaction. That's another way to say it. They have a huge customer satisfaction on the Tesla Model 3 and Model Y products. Okay. Huge customer satisfaction on the iPhones. Do you know which product does actually have the highest NPS score of any product in the world? Someone has put it in chat already. I'll just say it because we gotta wait. Julia Robhertz is actually the correct answer here. Nubank. Nubank's purple credit card in Mexico has the highest NPS score of any consumer product in the world. Isn't that nuts? Isn't that crazy? Tanner, what's your source? David Velez, who paid for, I don't know exactly how they did it, if it was an internal study or what have you, but he's not coming out and saying that without proof. And you know what? I believe him. Because they have like the lowest complaint ratings. They have the fastest growth, all, by the way, word of mouth. Like, yeah. Okay. Tesla is up a massive 3.2% over the last 4 years. Tesla is crap. Yeah, I know. But if you look at I'm not saying, yeah, I know to them being crap. I'm saying I know that they have not moved much lately. but their PE ratio is something like 300x right now. 300. And, people are talking about a larger bear market and everything. Like, that would be up there on some of the higher beta names that I could pick out. And now no one is budging. So, yes, there have been times where Tesla has accelerated and then those weak hands have been able to fall off. But you're talking about like essentially like $1 trillion of strong hands that are not looking to sell that company. Yeah. I finally added the Tesla Robotaxi app here in San Francisco. We'll try soon. Cool. Tanner, if you had to consolidate into 10 names aside from NVIDIA, SoFi, Hood, and Shop, who are you picking? You want me to name 10 companies right now? I couldn't do that for you. Yeah. Oh, it's only a 294 PE. You're so right. You're so right. Tesla rollouts are slow, though. Waymo kept continuing. Yes, but whenever regulation gets through, they'll be able to snap on. Like, I do think that Tesla right now, while rolling out slower than Waymo, it is a light switch moment. They have a ton of cars on the road with the capability to do full self-driving. Waymo, every car on the road is already being utilized. So, little different. Okay. You can't just name 10 companies. You named like all the names that he said you can't name. He said you can't name SoFi or NVIDIA or some of those other names. Can you do a deep dive on Visa or MasterCard? I actually would love to. I think that these are important names that I've not looked into as much in my youth. And now that I'm getting older, someday, hopefully, God forbid, like God willing, I turn 30 and I'm looking back at a long time of investing. By the time I'm 30, it'll be 12 years of investing. It's a good portion of my life. I'm still young, I get it, but I've realized in those years, you just have to buy the best companies. And Visa and MasterCard might literally be on that list. Great time to be 30, jealous? I don't know. Is it? It's definitely cool to see what's coming, but you're not 30. No, I'm 28. Just turned. Well, a month ago or so. Do we think the World Cup could be a catalyst to Uber? I don't think it hurts their business. But I don't think it skyrockets their growth too quickly. And then that would almost be like a one-time charge, right? So it's not like it's recurring in nature. Okay. Best company no one is talking about. Nubank was the first one that came to my head just then. We were just talking about Nubank, but that's got to be up there. The Shopify everyone knows, but no one does talk about it. That's also up there. In terms of ones that like legitimately no one knows, I don't know. That's a hard question. Come back to me. Ask someone else, then come back. Okay. Microsoft? I don't think you can say which company. What's a great company no one talks about, and then name, like the third or second biggest company in the world. Okay. Microsoft or Steve's been shilling Microsoft. It's true. He's buying quality names. Okay. Nebius, I think it's definitely catching a lot of people's attention right now. I was honestly thinking something like D-Local or something. Not many people talk about this name. Extremely small market cap, growing at 60%. Like the growth they're putting up in the emerging market that they're in, fully global. Payments has been a great business for decades. No one cares about it. That's the name I was thinking. Look at silver, up 2.3%, still climbing. Yeah, that is quite interesting. Sam Altman is becoming a liability to who? To Microsoft? I don't know about you guys. I mean, everyone has their own personal preference whenever investing. I would invest in OpenAI. But then again, I would invest in NVIDIA. So who am I? I mean, like, crazy investor to buy, this company that keeps falling. I can't believe what's happening with NVIDIA. It just makes me so angry. 212 down to like 174 on the best earnings they've ever seen. I'm aware SLV is not silver's price, but I don't think I can get silver's price on Moomoo, and I have Moomoo up right now. So it's tracking the price of silver, not 1-to-1, but, I assume the arbitrage is low, and then it shows me that they are up roughly 2.2%. So I'm chilling. Sam Altman seems like a crook, might be successful, but something is off in a bad way. I've heard a lot of people, not only public people say that, but people have been saying that his whole career. Who knows? He might just have autism, and people are getting like a bad sense for what that's been the big thing that people have a problem with Sam Altman, is they don't feel like they know his true intention. He could just be, what's the term? Neurodivergent. And I think you kind of have to be that type of person running a company that has gone from, no users to 900 million weeklies or monthlies or whatever in 3 years. I'm not blaming something. Like, I'm not suggesting that you guys have the same view that I do of Sam Altman. Like, he did freak out on Brad Gerstner, and I didn't like those comments and everything, but I also feel like he almost was like talking to a friend, and I think he kind of lost the script that like average people were listening to that podcast. And I feel like he thought like Brad Gerstner was honestly asking him that question. He was like, "Oh, you too? Like, come on. What are we doing here?" I could be wrong, but not many people shared the clip afterwards, after that. And honestly, most people that didn't like that clip didn't even watch the full podcast. Satya Nadella, who was also there, had said, Sam Altman's never missed any of their expectations for growth. Like always had surpassed them by great lengths, has never missed one internal metric. If you're looking at a company fundamentally, I mean, that must be one of the strongest, assuming that they can turn a profit. I just mean in growth terms. I probably shouldn't say the strongest fundamentally. That's probably not true. I think it was a good question. I'm not denying that it should have been answered. Yeah. If you're in any of the AI names or whatever, to some degree, we have to trust Sam Altman. I mean, he's a big part of it. Tanner, how do you explain the effects of job loss when AI and robotics take both physical labor and cognitive labor? Will the stock market matter then? I'm not sure. I'm not sure that that will be the case. I think people are making these grandiose assumptions that they can predict. Like, I was talking to my dad today, like legitimately, and he was like, I read on the news today that 50% of jobs are going to be taken once AI starts to be, much larger percentage of like the workforce. I'm like, says who? Who's this guy that you're listening to that just says it's a 50% job loss? I mean, no one has a crystal ball. We're seeing new jobs emerge from artificial intelligence already. There's been so many new jobs that in the past we never could have imagined even emerged. Like I always go to what I would consider a low skill job that has been created and the fastest growth job of all time, or in the last 20 years, I should have said, was manicurists and pedicurists. No one in hard times needs their nails done, okay? But in really good times, it spawns a lot of excess spending. So who knows? Maybe there's a lot more yogis and, self-help and care and all of these things because that's just what we have time for. I don't have a crystal ball. I'm going to monitor it on a day-to-day basis. I'm going to see what happens. But from everything I'm seeing from some of these larger tech guys is that they're actually hiring more because those people are more effective now using artificial intelligence. And like, I think that whenever, if you looked at Salesforce, if I can use Salesforce as an example, Salesforce could have created one, customer relationship management template that says you manually enter all of your customers' data, all of these things. We'll track it in our storage. We're essentially just a storage for customer data, and then you can come back and pull that data when need be. Why do they need thousands and thousands and thousands and thousands of employees? Because they have the opportunity to do more than that. So Mark Benioff says, okay, well, how about we create a custom CRM designed specifically for your business? So, you are getting all of the things that you need, and we cut away all the things that you don't. So then you can be more efficient in your job. And so we're not just creating one template that we're selling to everyone like blank high margin business. No, we're competition has made it so then they are forced to make things more customizable, more personalized, and lower margin. So, they can still compete in this market. I think AI is going to be to a similar degree. Yes, things are going to get more efficient. Yes, we will be able to solve the problems of the past completely automated. But the future problems, the future personalization is just going to require, like, people are just going to demand such higher personalization and specific needs to their own that it's still going to require headcount and forward deployed engineers and all of these things to make sure that businesses get exactly what they want. It might be delivered faster. It might be of higher need. Maybe businesses aren't going to upload their videos to YouTube. Maybe they're going to deliver it to their own, servers hosted by themselves. Like right now, a lot of these companies, can't even really do that. It's very expensive. Maybe a lot of that, the algorithms that end up sorting through individuals, companies, video and training and all of that. Maybe that's hosted all for themselves because some business was able to create this ultra personalized storage business. Like, I don't know what's going to come of this, but I can guarantee you don't either. Like, everyone's just thinking like, my business is going to be gone. So I'm never going to get a new business. I don't believe you. I'm literally like talking to a camera right now. No one else is in the room. Someone has someone's been able to create this software where you guys can hear me in real time, maybe like 3-second divide from whenever I've said this in my room across the world. This job didn't exist a few years ago. And now all my friends are YouTubers. Amit and Steve and Tevis and all of these guys are just talking in front of cameras. New things will come about. Humans are way too creative to sit at home all day. We want to do things. We want to advance. We want, like, am I nuts? I just, I'm not smart enough to know what's coming next, but I also don't think I'm dumb enough to think that we're all going to give up. You sit at home all day because I have the luxury of doing what I want to do now. You know, I like a lot of people are not doing what they like to do right now. I think that's the much bigger shame than, oh, what are robots going to take your job that you hate away from you? Like, go do what you like to do. I'm doing exactly what I want to do. Like, I don't know. Maybe there's some people that love taking out the garbage. You know, not me. Robots gonna be great at picking up the garbage street side. They're gonna love it. Okay, they can't wait. They can't smell it. They love picking up the garbage. Great, cool job. Very happy for them. But, you know, hopefully we still have children. I want to have children into the future, right? And maybe like that might even be in the next few months. Like, I don't know. I'm not gonna have children in a few months. My girlfriend's not pregnant. But if she does end up getting pregnant soon, is, you know, maybe full self-driving ends up taking over bus drivers and everything. But do you think they're just going to send a bunch of kids in an unmanaged bus to the school to learn from a bunch of robots? Yeah, right. You know, I think there's going to be more teacher jobs. Teachers seem to be handling, you know, 30 students a class or something like this. How about we get these kids into a class of 5? How about we have, instead of a bus driver focused on the road rather than the kids, we have a supervisor for the bus, someone that's walking around, you know, actually monitoring what's going on. Like, there's still going to be jobs. It's just going to be so much different. That's just, at least the way that I see it. You know, there's not going to be a bus driver. There's going to be like a bus attendant, a bus monitor. I could be wrong. How many kids do you want? Probably like 2. You know, replace what I have here. I know someone's going to be like, do you need like 2.1 kids? I can't have a 0.1 kid. Okay. I'm going to try to make large children. That's how I'm going to replace myself. How am I going to, I'm going to buy more food. I don't know. But, 2 kids, replace me and my wife, girlfriend. And that's it. Yeah. Large children. Your argument is basically everything is going to be fine. It always has been. Bro, like, the earth has gone through a black plague, and then like, oh, what came out of it? Well, more farmland to feed more people, and then the peasants ended up revolting. Like, I don't know. Things work out. I'm a pretty optimistic guy. I think human ingenuity is it's up there. I rank it pretty freaking high. I've got belief in economies. Okay. We're smarter now. We're working on more technologies. I believe in markets. A lot of people died. Yeah, but the people who lived had more food. Until it isn't anymore. Yeah. I don't know. I'm not worried about that because, like, also, if something happens to me and the lights turn off, what am I going to do? Complain? I'm going to be optimistic while I'm here. If it doesn't work, I mean, I'm gone anyway. Sorry, we're getting a little bit more into the death thing rather than how much money I'm going to make. But, like, for real, let's imagine even if all the jobs get replaced, I think the government to some degree then steps in and says, Okay, how many robots does each individual business have, and how much tokens are you generating for agentic AI? Okay, we're going to need to charge an amount of tax based on your amount of automation, and then we do UBI. We do universal basic income. Like, I don't think that that's inappropriate to charge businesses. Right now, we charge them for insurance for their employees and all of these different things. It's expensive to have humans. Well, it should be not as expensive, but it should be to some level hard to replace humans. Okay, I don't think that that should be a free task. So if they do, and it does end up affecting the job market, you know, there's definitely people like Sam Altman and Elon Musk and stuff like this that do believe that universal, as Elon says, universal high income will have to be the case. But yeah. We also don't charge companies for having machines or automated systems yet. Excuse me, yet. Don't clip that, please. I've been talking a long time. I haven't taken a sip of my coffee. Stop judging. Or do they tax on how many tokens, reinvest in military hardware, and every year there's a war until none of us are left? That seems more likely than UBI. Okay. I'm just not that kind of guy, you know? Just not a believer in like the elites are trying to get me to war. Yeah. You could believe in that. I'm not taking that away from you. Does anyone have an opinion on Capital One? I do not, unfortunately. Tanner, do you think Elon is good or evil? Good. I think that a lot of the things that he has done is net positive. I think most people, like I truly am an optimist. I think most people strive for good. You know? All right. Yeah, that's been pretty much it. Fiscal AI, by the way, like I said at the beginning, whenever we were breaking down Meta, you guys can go back. I'll try to make sure I have chapters. But Fiscal AI, I think their Black Friday sale ends tonight or something like this. Tonight at midnight. I know it's December 1st for sure. When December 1st? Not sure. But you go to Fiscal AI/future, which is a direct partnership with me and Fiscal AI, and they have an exclusive 30% off all plans. Okay. Honestly, I have the enterprise one. It's good. I don't even like I think the pro on a yearly basis is the best bang for the buck. This is what will get you 99% of everything you need. Enterprise is good, but yeah, you definitely don't need it if you're just looking into businesses, just for your own portfolio. Cool. Thank you all so much for watching. Really do appreciate your time. But bye for now.